Hello, everyone. Welcome to today's biweekly webinar on the SBA Paycheck Protection Program. If you're joining us for the first time, Fundera does this twice a week to offer up an opportunity to provide any updates affecting this program overall, to getting the loan itself, to more recently where a majority of the questions have been around getting this loan forgiven. If you have joined us multiple times, we have some exciting updates today regarding forgiveness that we will be sharing, as well as diving into questions in a slightly different format than what we've been doing. Given the technicality with forgiveness and how many changes are occurring in real time, we, if you've seen over email, have been starting to accept questions prior to the webinar in order to ensure we're able to research and have the best information possible to answer your question. So we're going to give this a try. So if you do ask us a question live, there's a chance we may not get to it today, but we'll add it to our backlog of questions we hope to get to. And you can always reach us anytime on Twitter at Fundera or support@fundera.com. I am Meredith Wood. I am joined by two of our experts here at Fundera. First is our overall SBA loan expert, Seth Nelson. And the second is our head of finance, Justin Ridgely, who has become our internal PPP forgiveness expert here at Fundera. So I'm going to pause there, hand it over to Justin, who's going to go through a handful of updates regarding loan forgiveness that has come out over the past couple of days. And then we will dive into the questions that we did receive beforehand. Take it away, Justin.
Thanks, Meredith. Okay, so as Meredith mentioned, after a couple of weeks or multiple weeks of wondering when we were going to get some more clear guidance from the SBA on, the forgiveness process and details around it, we got something on Friday evening from the SBA, which is the SBA's PPP loan forgiveness application. And the slide that I have up now, there's a link to this here. And it's pretty meaty, and I would encourage everyone to kind of take a look through and start to get familiar. But I think, at first glance for even myself who, deals with forgiveness every day, it's quite complicated, and they do give a lot of instructions, almost so many that it's overwhelming. But I would advise everyone to start by taking a look at the forgiveness application, because there is a lot in there, and it'll help kind of ground you in what you do going forward. The other important, and I'll dive into more of that application here going a few slides next. But the other update which I threw in here, which was interesting yesterday, which one of the main weaknesses a lot of people have criticized the PPP program for is this 8-week timeline. If you were someone who got a loan, after say April 15th or even up into May, you're coming up into this 6/30 window, as well as just the fact that 8 weeks is not the ideal deployment timeline for this money for a lot of businesses, especially businesses who've had their demand severely cut and would like to kind of save this money, more than 8 weeks and still get it forgiven without having to worry about stuffing, what kind of payroll can they fit in 8 weeks, and if they can't, then they don't get it forgiven, and all those concerns. So one positive development was yesterday, President Trump and Secretary of the Treasury Mnuchin met with some restaurant, leaders, restaurant industry executives, I should say, in the White House, and they talked about extending this period to 24 weeks. It seemed like there was some appetite for doing this longer than 8, but maybe not 24. President Trump himself said that this was an easy thing to do, and Secretary Mnuchin talked about there being a technical fix that could be done here. So we'll kind of wait to see how that shapes up, because it would be one of the most encouraging developments there is. So with that, I can't quite in 30 minutes cover questions and also go through this whole application in depth. So I'm going to start by hitting on a couple key points that I think are more relevant from an actionability perspective for people who've taken PPP to this point, and cover some of these main updates we've seen with the application, things that were clarified or further explained or changed. And then we'll go into some questions which I think are a lot easier to answer in some cases now that we have this application put out by the SBA. Okay. So past this, we've covered this. This is the basic kind of calculus for how forgiveness works. You have an amount eligible for forgiveness, and then you have reductions to the eligible amount. We'll come back to that later. Okay, So one of the main updates that was released in this application is the concept of an alternative payroll covered period. So, if you're a business that runs payroll every 2 weeks, your payroll comes at the end of the month and mid-month. If you get your loan in between one of those dates, it would be very annoying to calculate the exact costs that fit into that 8-week period. And the way this was kind of defined before through the CARES Act was this covered period starts the day you receive your loan in your bank account. Well, the SBA gave some additional guidance and introduced this concept of the alternative payroll covered period, which basically says that if you receive your loan on a Monday, but your next payroll is on a Friday, you can start your 8-week period with that payroll cycle. So it essentially allows you to align your payroll periods with your 8-week period. It makes, if you think about, when you're looking back to at the end of this period and applying for forgiveness, and you're looking at trying to add up all your different payroll costs and other items, this would make it a lot easier. And hopefully in many cases will, if you receive this from like the 15th to the end of the month, you could most easily just bump this to like the first of the next month, which then would make other non-payroll items go on like a monthly billing cycle as well, and make this a lot easier. So this is something that I encourage everyone listening to kind of think about based on when they receive their loan, to then evaluate, okay, do I want to use the 8 weeks starting from when I received it, or would I like to align it with this alternative payroll covered period? And you can use this concept also for non-payroll items too. It's just, they call it that because they kind of say you can align it with a payroll period, which obviously tend to fall on set dates. And I pasted in the whole passage here in this slide because I think it's helpful to kind of read it firsthand there at the bottom. But this is a kind of a huge update, and I encourage everyone to think about it. Another one that was interesting, which was something we kind of had assumed, was that it's not, when you're thinking about what expenses fall within an 8-week period, it doesn't have to be just what you've paid out in cash. And this becomes less of an issue with that alternative period as I just described. But if you are still using a regular 8-week period, you may have some expenses that were incurred during that 8 weeks but have not been paid out due to a billing schedule or whatnot. And so what this does is just clarifies that the expenses that fall in this 8-week covered period or alternative payroll covered period are paid and incurred, meaning that if I have, my rent is due 5 days after the end of my 8-week period, I can still count that rent as it applies to that, previous period, even if the cash leaves my account after it ends. So this was a nice clarification. One of the things I think that this clarifies specifically that, won't apply here is you can't incur excess costs during this period and then pay them out much later. The costs that you incur have to be paid out in either the next payroll or like the next, rent billing period or your mortgage interest billing period or something, or utilities billing period, of something of that nature. So what you can't do is say, okay, I have these 8 weeks. I'm going to, accrue a large bonus for myself or my employees, or and then count that towards PPP forgiveness, and then not pay that cash out till 4 months later. Basically, the only way you can get around not paying the cash out during the period if it's basically paid at the next due date following that 8-week period. They make a note a few times in the application as well to make sure you don't double count things as both paid and incurred. It seems relatively straightforward, but I imagine there's some edge cases where that would be easily done. So moving along, just to go over this again, because I think this is something that we get a lot of questions about, and there is one update here for kind of self-employed and owner employees that I'll get to in a second too. But just want to go over again, what payroll and related costs are eligible for forgiveness, since these were tightened up, these definitions in this application as opposed to kind of the guidance we had previously. So, okay, so what we have to start here is always cash compensation. We get questions, does this include tips? Does this include, sales commissions? It certainly does. It includes, salary, the tips, commissions, paid leave as well, and vacation, family, medical, or sick leave. The one thing we've had a question about before is the FFCRA Act. It does not include leave covered by that act. Interestingly, this also specifically calls out allowances for dismissal or separation paid or incurred during that covered period, effectively meaning severance. It also called out again, if essentially the application lists this $15,385 number as the most that could be included in cash compensation for any employee. This kind of helps you think about, if you're thinking, okay, how do I think about an employee that makes over $100,000 a year? I have to then, prorate that for this time period. And how do I know what the maximum is? Well, the maximum is 100,000 divided by 52 for 52 weeks times the 8 weeks. And that, so the most any employee could have included here on cash comp, meaning the above definition, is 15,385. That does not include the items listed below that sub-bullet. So what those are, just to reiterate, employee health insurance paid for by the employer. So these are employer contributions to self-insured or employee-sponsored health plan, excludes any pre or post-tax contributions by employees. Meaning if an employee contributes post-tax to an HSA, not eligible. If other things are deducted from their paycheck, not eligible. But if the employer itself is paying, eligible. The next thing is a similar thing, but for employee retirement plans. And then similar to, how all these things were included in the application, we have employer paid state and local taxes. These were explicitly called out and also specifically excluded are taxes withheld from employee earnings. Then the way the application flows is, there is this cash comp section and it doesn't make any mention of, what if you pay yourself as an owner or a sole proprietor, and then it kind of has a separate line for that, which they call, it's line 9 in the application. And I kind of almost quoted it here. It basically says, for these individuals, there's a cap as well, and it works slightly differently than the 100K a year cap. So what it essentially says is you have your amount that you can put here and pay yourself during this time period is capped at the minimum of 15,385, which is 100K kind of pro rata annualized, or the 8-week equivalent of their compensation in 2019. So they didn't define this fully, but I think it's safe to assume, what this means is you basically, whatever compensation you made in 2019, you find the weekly amount and multiply that by 8. And then the lesser of either that or 15,385 is what you can put here. So what this means is that if you made over 100K per year in 2019, you can put 15,385 for forgiveness and no more. If you made less than that for an 8-week period in 2019, that is also the max you can then put. So it kind of, if you've given yourself, a significant raise since then, this is slightly problematic. But what it precludes you from doing is also giving yourself a larger one-time bonus with PPP funds. Somehow that might work out. I don't know exactly how that would work, given you'd have to have showed a previous payroll from 2019 for the basis of the loan. But either way, that's how the calculation works. All right, moving on. So they also clarified a little bit on non-payroll costs that are eligible for forgiveness. These are, as we said before, mortgage payments, lease payments, utility payments. Utility payments was the main one they clarified, which includes, electricity, gas, water, transportation, telephone, or internet access. Also, they specifically said an EIDL loan will just be deducted from the forgiveness amount, and there is a space on the application to put your EIDL loan number and amount. This is the same from the previous version of this deck. It's a simple calculation that shows kind of how you would add this up. not much has changed in terms of how you determine what your total forgiveness amount could be under this construct of the 75% has to be from payroll costs to get 100% eligibility, with 25% potentially coming from those other non-payroll costs. Okay, so I'm going to get into just one more thing quickly before we go into questions. I know there's a big number of those. They did clarify the rules around these two reductions based on full-time equivalent employees and salary and wages. The main update is they've made it easier to restore these amounts. Basically, if, and there's some certain date criteria, and we can kind of go into this more in detail in the next webinar with some examples, but if you restore either your full-time equivalent employees or your salary and wages on even June 29th, you will be eligible for full forgiveness. They also clarified mostly on the wage side of things, or salary and wages, that it's done on a rate basis, not an actual payment basis. So it compares Q1 wage rates to wage rates on June 30th, essentially 2020. So if someone was making the same per hour or the same salary and had it reduced in the interim, but then it was brought back up before June 30th, you would be all set there, and it just goes off the rate, not what was actually paid in any period. So with that, I'm going to pause there, and knowing that if you take one look at the application, you'll realize there's a ton more we could go through, and we will do that in subsequent webinars, but I wanted to take some time to answer questions.
Wonderful, thank you, Justin. So just diving in with some of our pre-submitted questions. We have one of our participants is in a situation where they were able to stay open prior to getting their PPP loan and have paid employees through a handful of ways. One of their employees has actually gone on unemployment and wants to stay there until they can no longer. So from this attendee's perspective, they feel that the only way they can use up the loan is to pay people who are not on unemployment extra to make up for the one that is. But if they could stretch it out after the 8 weeks, it would allow them to get back onto their feet when it starts to get busy again. So they don't really want to spend it all now. What would you recommend they do in this scenario, especially with the new releases to the forgiveness information?
Yeah, so I think I brought up a slide which I didn't show here, and want to highlight specifically the last bullet here, and I think this kind of applies here as well. So there are some exceptions to when you're considering for forgiveness. You're worried about one, spending the amount, right, and two, are there situations where this shouldn't impact your forgiveness? And this situation reminded me of kind of the last bullet here, where the exceptions to a headcount, otherwise known as full-time equivalency employee reduction, kind of are covered if you've made a good faith written offer to an employee for employment which was rejected, which kind of that could be construed as someone who went on unemployment and you offered to bring them back and then they refused to come back. I think that would fall under that. And then there's also employees who were fired, voluntarily resigned, or requested or received a reduction of their hours. These do not impact forgiveness based on that potential reduction scenario. I think the second part of that question is, how do you spend the money if you are it would be better used when you're waiting to reopen and hiring more people. That is unfortunately something that only probably is going to be helped by this 8-week period being elongated to hopefully 16 weeks or longer. I think you can't spend it on anything that wasn't incurred during this period. And I know it's a pretty unsatisfying answer to say kind of tread water and do what you can here, but we're hopeful that this period will get lengthened, in which case you'd have a longer period of time to deploy those funds to employees.
For the next question, can an owner's draw be included with what can be forgiven?
Yes, that was one of the big updates I went over a few moments ago, which was essentially, this new line 9 on the sheet, which is, they have specifically called out a place for this owner's draw, whether they've defined it as owner employees, self-employed individuals, or general partners. These are the amounts that we think of in the owner's draw, and this is where you would put that. Again, if it's subject to the limits as defined here, at the bottom of this slide.
Okay. For the payroll calculation on the forgiveness amount, is the $100,000 cap applied on base compensation or total payroll, such as health insurance, local tax, etc.?
Yep, covered this one in the intro. This was explicitly on cash compensation as defined at the top of this slide, which also includes, any vacation, family, medical, or sick leave. But this is, salary, wages, tips, commissions, health insurance, employee retirement, state and local, not included in that cap.
Okay. So we have a participant who is running payroll next week through their software, or I should say payroll service. The check will be dated 5/21, but it's representing the pay period of 5/3 to 5/16. If they receive the funds on 5/13, so in the middle of that pay period, can they use the funds to pay for the 5/3 to 5/16 pay period and still be within the forgiveness timeframe?
So, that one, I think that I hesitate to answer definitively here because there was some, the concept of incurred versus paid, was kind of introduced with this application. I think one of the things I'd be interested to know is does that, if the SBA comes out with their frequently asked questions, does that kind of apply backwards the same as it does forwards? Meaning, if I can include things that are incurred but paid later, can I include things that were paid but incurred before? And I think that's what this falls into, where the actual payment is coming for a period that was before the loan. Can that be included? And my honest answer is I don't know. I think there's an argument to be made both ways, and I hope that the SBA will clarify that going forward. As far as how that would work is, I don't think you need to. That's not something we totally need to know now because you're going to make the payroll as you normally would. And then when it comes down to maybe that payroll doesn't count, but the one at the end, which is incurred but not paid, will. So I think that's probably where this will end up going. I would encourage you to kind of think about it that way, as opposed to just trying to count this cash out when you may be able to count the incurred payroll later that's not paid during the period instead.
So can you fund HSA accounts for the year with PPP funds?
HSAs weren't specifically mentioned in this, but I think as long as it's an employer funding them, an employee or employer contribution to an HSA, and I'm no HSA expert, but as long as it's paid by the employer and not the employee, then yes, I would assume so.
And can you increase retirement contributions for the 8-week period as long as done for all employees?
I haven't seen any rules on, what you can increase or in terms of this. I think if it's an eligible cost, which is employer paid retirement, then I see no reason under the current guidance why that couldn't be included, even if you increased it.
Mm-hmm. And I know we've gotten this question a couple times, and it's confusing for a bunch of different people around what constitutes utilities. For example, are phone and internet part of that definition?
Yes. So thankfully there was some previous guidance that people were kind of extrapolating from other SBA loan programs, but the SBA specifically defined this in this application. And I have it here on the third bullet. Essentially says, electricity, gas, water, transportation, which is interesting, telephone or internet access. Transportation is the one that's most confusing to me. And I'm not quite sure how to apply that. I mean, but the other ones are fairly clear.
We have somebody who pays rent in 2 locations. Can they pay for both rents out of the funding during the 8-week period?
Yes, assuming both leases were in place before February 15th, 2020, which is kind of the case for all 3 of these, is that you can't have, taken on a new lease after that period of time, just so you could kind of get the cost forgiven by PPP. So if they're both owned by both leased by the business, or if this is an individual leasing them on behalf, the individual is the business, then both of those would apply. There's no limit on number of locations. Rent is rent.
Great. And switching over, I know we have quite a few independent contractors amongst our attendees. So in this scenario, an independent contractor received a loan amount, let's use their example, for $6,400. Their net profit on their Schedule C is about $25,000. Does this mean that the loan forgiveness amount for their payroll portion of the loan would be $3,900, which is taking their net profit, dividing it by 52 times 8 weeks, which is essentially their 8 weeks of income? Is that what they should be using for payroll?
Yes, so if you do it that way, if that's what you reported in 2019, then under the provision that as a sole prop, you're allowed to only pay yourself either the minimum of the 8 weeks of what you made last year or the max 100K if you made over that, then that is how that would work for that period of time.
Okay.
Just to jump in on that one, I think so. It sounds like the loan amount itself was $6,400, and which is obviously quite a bit. Well, that's based on the Schedule C amount. So effectively, the question is, do I need to use at least 75% of that $6,400 in order for the loan to be forgiven? And the answer to that is yes.
Thank you for that clarification, Seth. And I actually, with just 2 minutes left, I'm going to throw a couple questions your way. Taking a step back from forgiveness, it seems like we still have some participants who have yet to apply for a PPP loan, so I want to make sure we can help them out. The first is we had somebody who applied via a lender and their documents weren't quite ready or complete, but now they are ready, they have their documents complete. Are they able to apply to the PPP program again?
Yes, absolutely. As we've shared before on this webinar and in other forums, you can apply to multiple locations, multiple banks or other lenders, as long as you only accept one PPP loan for your business. So we've heard of a couple cases where some folks were able to somehow be approved for PPP through multiple lenders and actually ended up sort of inadvertently accepting the loan from 2 places. Make sure you don't do that. You can only accept one PPP loan, but that doesn't preclude you from applying to multiple places. So the answer to this is yes, you can apply in multiple places.
Specifically, somebody has asked, how do I file for a Fundera loan? And I'm assuming they're probably talking about applying for PPP through Fundera.
Yeah, so you can head over to fundera.com/PPP and you can go through our application there. And what we will do then is determine the best PPP lender to submit your application to. And then you'll be, on your way from there. Ultimately, again, just as a reminder, Fundera is not a PPP lender itself. We are a marketplace that will connect you with different lenders on our platform.
Right. And I'll just add to that before I close this out that in some instances, when you do come through Fundera, you might find that we pause you in our application and recommend you go direct to one of our lender partners. And when we do that, it's because we've realized it will be the fastest route for you. And our job is to get you on down the path that's going to be most successful for you and take you the least amount of time. So most certainly don't be taken back if you do see that when going through our experience. But we're up on time. Thank you all for joining us today. We didn't get through quite as many questions as we'd like to because we had quite a bit of content to share with you regarding updates since that was released on Friday. So please do join us on Thursday at 1 p.m. Eastern. We'll continue working through the questions that we do have, as well as the any new questions we get beforehand through the submission over email. And we will also compile the questions that you all submitted during this live session. And as you're submitting your feedback for the questions you may have, feel free to drop a note if you'd like to see these times extended to 45 minutes or an hour, if that's something that you would have time for. We do try to make them as efficient as possible, but we know everyone has a ton of questions right now. And if you have anything urgent, reminder, you can reach out to us on Twitter at Fundera or support@fundera.com. We're happy to be helpful. Thank you all for joining us today, and a special thank you to both Seth and Justin for providing this excellent information today.